Good evening, everybody, and welcome to another edition of Live Market Analysis. Got to get myself roughly centred there. Not centred, obviously, because we've got an hour of power of technical analysis coming up, but centred because of the craziness of markets at the moment. How am I going? We'll obviously talk about the craziness of markets after we do the disclaimer, which says that everything we're going to talk about tonight is general, has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this advice, consider all of those things are very important, of course. And if you're not sure about any of them, ask a financial professional and they'll be able to guide you. The rest of the information in that disclaimer is important. Obviously, you can read it in the recording of this session, which I'll send to you after its conclusion. About the gist of it is you are responsible for everything you do in the markets and not me, and losses are inevitable at some stage. So, be careful and manage your risks. And that's going to be the theme, I think, for tonight's session is managing our risk. I expect many of you probably have already been doing that, stepping yourself out of the markets or reducing your risk over the last couple of weeks, as we've been discussing here. But of course, there may be setups you're interested in looking at tonight. It could be longs, it could be shorts, it could be crypto, it could be indices, it could be bonds, it could be stocks, it could be forex, it could be commodities. Ask me about them and I'll give you some TA. Or it could be anything to do with the 3 M's of trading: methodology, money management, or mindset. Let us head over to the Amy broker screen. Not that one. I'll show you that in a little bit. That's why I was a bit late today. But kicking off with our portfolio management model, I'm pretty sure I said last week we were going to a half to a third. Correct me if I'm wrong. So if I'm wrong, say no, Carl, you said something else, but I think that's where we're at. And I think that's probably about the right setting, isn't it? No more than a half of our capital is allowed to be invested if you're trading in the US. As little as a third, given the events since our last catch-up, probably a third is feeling a little bit more appropriate than a half. Our last catch-up, that's 1, 2, 3, 4, 5. So we had that bar there, didn't we? So we actually had a decent bar, which is probably why we were erring on the side of more a half than a third. That wipeout bar there told us something far more sinister was going on in markets, and it wasn't going to be just a run-of-the-mill dip and bounce into the long-term uptrend ribbon, which has been very reliable up to this point. It's something that will take us longer to get out of. And to be fair, that candle there, indecisive, that candle good, that candle quite terrible actually. Let me zoom in for you. That long upward shadow, low close, really giving us the dink in the long-term uptrend ribbon that we don't want to see. We want to see a bounce and then a dink above it, and then a nice little double bottom, rising bottom, get out of there. What we're actually seeing is some semblance of potential excess supply in that zone pushing us down. Look, to the Nasdaq Composites credit, that day just snuck in and closed by 2 points above the ribbon, and that day obviously you can see, whilst being the third day out of 4 actually spending time out of the ribbon. This is how good this ribbon is at trying to hang on, managed to close in the ribbon, and for all intents and purposes, that's a strong demand side candle. It is volatility, it is zebra, last 5 or 6, it is tough going. And when stuff gets tough like this, trend traders, they don't hang around. They're not brave. They're not trying to pick bottoms. They're just getting out of town and just waiting for the next trend to establish itself. And that could be the prevailing bull market, still a bull market, the prevailing bull market re-establishing itself, or an equilibrium phase establishing itself. We could be sideways. We could just sort of vibrate around here. You've seen it in many charts that you've applied my ribbons to, just zigzagging around that long-term uptrend ribbon for a period of time while we're working through that old period of excess demand, which is now being met by supply, and then we could either break, we could go up, but if we move into that period of excess supply, we're going to be then moving away from that long-term trend ribbon, which will then start to act as a zone of dynamic supply. So I think we're the same, half to a third, leaning more to a third than a half, if you get my drift. Over here on the ASX 200, it's much more like a third, isn't it? I'm pretty sure we were the same last week. Again, please correct me if I'm wrong. I think I said a half to a third, and probably, again, leaning closer to a third. I don't have to explain why, because there's a bunch of big bloody black candles on the screen, and today's bounce was absolutely pathetic. Dead cat bounce, where you drop, take a cat, go up to the top of the building, drop it off the side, see how high it bounces? The answer is probably not very much, and that's what happened today. So not an emphatic response to the excess supply that's in the market, but you never know. I know I'm covering my ass a little bit here by saying, oh, you never know, but you do never know, because it looked pretty horrible there, albeit at that time we were within the relative safety of that long-term uptrend ribbon. We are beneath it now, and my great fear is that we are now going to see that start to act as dynamic supply, and we go in here a few times and then break down. It's going to get really ugly. What else can I say? Well, the other thing, the other pearl of wisdom, if you could call it that, would be kind of this move is very interesting, of course, but it's not as important as the next move. The next move is so important because it'll either confirm that we're transitioning out of the bull market, or it'll confirm that the bull market is still going. What's confirmation of a bull market look like? It's going to look a lot like this, a strong demand side response, and even on pullbacks, you still be saying we're okay. Or it's going to be a feeble and prolonged rally, just inching back up, death of 1,000 cuts, and then a rapid decline after that. So 2 scenarios, not 10 scenarios, and we just have to see which one plays out. But that is why, if we're following the model over the last couple of weeks, because we've been saying this for at least a couple of weeks now, I want to say maybe even 3 weeks, that we started to grow cautious and then started to get more cautious and more cautious again, is why we have been reducing our risk into this move. Okay. Let us go to the whip around the grounds to see if there's anything maybe encouraging us to say that we don't need to be so conservative, or making us, or is there something making us feel even more conservative. The Russell 2000, I think, is consistent with what we've seen so far. It has, much like the ASX 200 and not like the Nasdaq Composite, because we say in these sessions many times that the Russell is probably a better indicator of what the ASX 200 is going to do, and lo and behold, there it was. It was the case. This one is trading beneath its long-term trend ribbon, but hey, some decent candles at the end there, a bit like the Nasdaq. We might even see a little bit of a bounce here, and just reiterating, that move is not as interesting as the next move. And I think this one has almost already done the confirmation part, hasn't it? I mean, this is the prolonged and feeble rally through here that I was talking about, applying to the Nasdaq and to the ASX 200. If we see this prolonged feeble rally, we're more likely then to get the next leg down. It's the A-shape, V-shapes. The V-shape rallies are always the best ones to tell us that demand is still very, very strong in the system. Flat means demand not as strong, supply stronger. V-shaped means demand very strong, supply not as strong. I think quite logical. Let us go around the grounds. And interestingly, this whole Make America Great thing hasn't turned out so well for America, as we can see, and then by extension, unfortunately for us, because it seems we're a little bit more joined at the hip to President Trump than we are to what's going on here in Europe, because there's been a massive flow of capital away from US assets into European assets, as can be seen by these charts here. But there, if the old saying, if America sneezes, the world gets a cold. They can only, I think, stay up for so long, unless US stocks start to improve. The Hang Seng actually doing very well, and we're seeing some of those other markets that I guess more lumped in with the US and China, perhaps more trade sensitive to those regions, struggling. There's the Nikkei in Japan. There's India. Shanghai Composite still very, very strong. Don't get me wrong, and a bit flatter there. On the China A shares, we have looked at those, but just looking through the indices, the sub-indices, and we can see, and we should see, some really great trends or historical trends now under some serious pressure. That's discretionary. Energy was a really terrible trend. It's still under pressure. Nothing's changed there, and reiterate. I don't know, I just called this so well. It makes me very happy to see that chart when I see it. This one, I was very much on the train up, but I think that train has changed. If I'm not mistaken, I ran ANZ in the downtrends list during the week, so that bookends that. That has completely changed. NAB, Westpac, they've been coming up in the scans. I haven't seen them as shorts yet, but certainly there is a zero risk position across all of those off the top of my head. Perhaps CBA is the only one that might still be hanging in, potentially with a third. And some of them even potentially turning to shorts there. So that's the XFJ. You can see its interaction with the long-term trend ribbon. Gold still looks fine, still great, a bunch of great gold charts out there. Healthcare has completely turned CSL. I'm just going to give myself another pat on the back there because I've absolutely nailed that call as well. That's the CSL index. And technology starting to come off. Some of these charts are doing what I said we don't want to see, which is the feeble rally, the long-term uptrend ribbon acting as dynamic supply and failing there, and that can't be a good thing. Materials sideways, no big deal there. Resources looking worse. Property is broken down. These are not good things to say in a bull market. Property is broken down. Staples got wiped out by, I don't know what happened with Woolworths. I don't know, Endeavour. I don't follow it close enough. Telecommunications still, I guess, in trend, but looking far weaker. And utilities is doing its whipsaw dance around the line. So look, I don't think there were many sectors apart from maybe gold that were still intact there, and that it tells you about some of the underlying problems that the ASX now has. I'm sounding a little bit doom and gloom. I don't want to call it as I see it, but I'm always a firm believer in the bull market until I have unequivocal evidence to the contrary. But there's been some damage done, and the frustrating thing for me, probably for you as well, is that it started on Valentine's Day at a record high, and we looked at that day and we saw the upper shadow. There was two little upper shadows in a row. Somebody tweeted at me and said, "Oh, they're shooting stars" or whatever. I hate that term, shooting star. We just say upward pointing shadows, right? Because that's what it is. And we didn't think much of it at the time, and it turns out, well, they were very, very clever, weren't they? They could see stuff that was coming and selling into the demand that was still in the system. Looking at the base metals, actually nothing too untoward here. Aluminium down on Friday, but otherwise up during the week. Copper generally stronger during the week. We'll skip iron ore, we'll look at it later. Nickel rising, is still a horrible trend, but rising during the week. Lead having a pretty good week overall. Tin probably 50-50, and zinc, I'd say, closed higher than where it started. Lithium's doing nothing at all there. There was a bit of a blip up during the week, but it's since had a couple of down days. So in summary, I'd say base metals unusually strong, aren't they? Let us head over to the TradingView screen, and we'll pick up a couple of themes here now, and we'll kick off with, what have we got on? We happen to have Bitcoin on the screen. We might as well talk about it. And the reason why I was late today is I was getting these indicators set up for you. When we last spoke about them, I said I was going to find a way, or try to find a way, to combine them all into one indicator, if that makes sense, or the ability to plot them all on the same chart and share them with you simultaneously. And I cannot find a way to do that. If you know a way, let me know, but I know you don't because it doesn't exist. So I've had to set them up as three separate new scripts. Obviously, the dynamic support resistance clouds you already have, and it's these three new ones which I want to share with you. So the relative strength comparative, just my volume, not reinventing the wheel there, but average to range, which I do a little bit different from the standard Wells-Wilder formula. And the only way to do it is for you to send me your TradingView username, and then 3 times I will enter it into each one of those. I can't see any other way, so we'll do it that way. I'll put it in the email tonight to remind you, but I'm sure you'll remember. And if it's a pain for you, it's a pain for me, but we'll get it done at some stage between now and the end of time. So that's that. That's good news, and certainly a valid reason for me being a few minutes late today. They are on screen, so we'll use them tonight. Double click on that and you can select any base security you like. At the moment it's the XJO. We're going to be looking at, well, we're not looking at Aussie stocks now, are we? We're going to look at other stuff. So we'll leave it for the time being, and we'll change it to the Nasdaq later on. But we were talking about Bitcoin on screen. I'm a little bit lost because I can't see my trend ribbons, which are there now. There they are appearing on screen. That's how, well, technology, great. And so Bitcoin, I said last time I had that candle to look at. It had come back into the zone, a zone which I had said months ago now that I'd be targeting to buy some back at after getting out above 100 and waiting for some nice candles, and that was it. And it turns out next candle, and down she goes. And look, Bitcoin is definitely beholden to this broader risk-off theme. It's not a hedge against anything. It never has been. It is a purely speculative, liquidity-driven instrument. You have to understand what type of beast it is. And when cash is being sucked out of the system, number one, because there's just less speculative cash around, and number two, traders who love to punt their brains out are getting margin calls on all their US stock holdings, okay, like Nvidia and the Magnificent Seven, because all they know is how to go long on the way up and then get toasted on the way down. Those margin calls tend to sort of ripple through the broader risk system, of which Bitcoin is potentially the king of, and it will get stung in a risk-off situation, and it will recover when ultimately stocks recover. So there is a correlation there. If I picked up a third there, I'd seriously consider just taking my medicine and just sitting this one out for an extended period of time, perhaps. If you're happy to run a third, but we would not be looking to add any more than that at this stage, okay? And if you're running that third for the sake of just having some exposure there, that's okay. Otherwise, I can't see any reason. Zero risk position for me. Let's go to silver futures, and we're just going to continue our rip around the grounds. There's really nothing to see here at all. It's more sideways, really, for me than anything else. So we'll skip it and move to gold. I think gold's got a couple of problems here, and it's a nice little segue from that Bitcoin discussion to gold, because yes, gold is often seen, generally seen, could go that far, as a hedge against uncertainty and volatility in other risk on markets. That's bullshit. Gold is also, especially when it's trending like this, and there's just such a huge speculative interest and such a crowding into gold for that same theme, it is going to at some stage make that switch back to just being a risk-on asset as well. And it'll get hit when everything gets hit, because liquidity is the issue, right? So, and money can go into cash and earn a yield, and it can go into bonds and earn a yield if you want safety, because gold is, what is gold actually? It's kind of useless when you really think about it. You can make trinkets out of it, and you can line satellites with it, but apart from that, what do you use it for? And there's probably a few gold bugs out there that are now seething, and that's just too bad for you because I've got the microphone, I guess. But yeah, watch gold. Don't just assume that this is the rally to the end of the world, because literally to the end of the world, because stocks are coming down. It's not how it's going to work. Much like we said, there was an inflection point with the bond market where we talked about this. Falling bond yields are good for stocks, but if they fall too far too quickly, it means something else. There will be an inflection point for gold, and I wouldn't want to see it close beneath 28.40. I think that'll do some damage to the trend. So heads up on that one. Copper is trending higher generally. I talked about it last week, didn't I? I said, do I take the bait on this one and think it's going to go higher? And I always take the bait on copper, and it always disappoints me. It's disappointing me again, but I still think that one's intact. Iron ore is not even worth talking about. There's no trend there. Uranium certainly has a trend, but it's not your friend if you're long uranium stocks, but none of you are you? And natural gas still looks very good, bucking the trend, so to speak, compared to many other commodities. And crude oil is looking pretty awful. I did notice that there was a bounce in thermal coal, albeit a very modest one, compared to just how far down it has come, but it's bounced about 8%. But at the same time, coking coal, metallurgical coal, which is very much a growth-oriented commodity. Thermal coal, we have to burn it, we have to stay warm, don't we? But coking coal, no, we don't need that, because unless you need to make steel and stuff. That's the technical term. Let us quickly go to the bond market and finish there. There's not a great deal to see here, really. We've had that big move down that put the fear of God into everybody, and we've kind of rallied a little bit, steadied the ship. Stocks are trying to rally a little bit, steady the ship, and now it's about which way it goes from here. Actually, if it doesn't go anywhere, that's fine. If it just stays where it is, we've actually had lower yields, and that can be good for the market if people start to get more confident that growth isn't about to fall off a cliff. So staying here is fine. Rallying a little bit is fine. Spiking back up, probably not fine, because If the economy's still not good and this is spiking up, then we're going to start to talk about stagflation. You're going to start to hear that word thrown around. We don't want that. Markets don't like that. What's the alternative? We've talked about staying around here. That's fine. Going up a little bit, that's fine. Going up a lot's not fine. The other alternative is going down fast, and that would not be fine because that means something is drastically wrong with the global economy, and risk will be pooping its pants if that occurs. So let's hope it doesn't. Or hope it does. If you're short, we shouldn't talk like people who are long. We're not people who are long all the time. I hope not. You do, to be fair, you do tend to ask me every Monday night only about longs. If you've given me 1,000 requests in the time we've been chatting on Monday nights, maybe 3 of them are about shorts. So you might, yes, we've got this risk management model that pairs back risk, so you must have fewer longs. You can do less damage to yourself in a downturn, but you should probably also think about some short cover as well, I think. That's the whip around the grounds. Let us get to your offline requests now. And we're going to start with, I'm just going to check over here and make sure everything's still working and say hello to everybody. Hi, Adonis. All good there. Different request from Adonis. Perry. Okay, nothing's broken, so let's keep moving. And we're going to go, as soon as I remember what I'm doing here, I'm doing that. And I'm going to do this, and I'm going to do this. And now we're going to start with Davis, who wants me to look at Canyon Resources for him. And it was going gangbusters. Markets come off, Canyon Resources come off, which is a bit disappointing because plenty of other little gold stocks, I think this is a gold stock, have done pretty well. So that's disappointing. Was outperforming the market, but much less so. You can see here, as bad as the market has been, this is starting to just pare back even faster. So it looks small, but percentage terms, that's probably true. We have a bunch of black candles coming in. Could you have seen these black candles coming? No, you couldn't have, because as late as that day there, everything looked absolutely dandy. 100% full risk position on that day. Could you have gotten some risk out before now? Let's have a look. What about this day here? Is that enough to spook you out of a third of your position? And that's all we'd be talking about initially. I don't think so. I think if you're jumping at that one, I think you're being a little bit pedantic. The trend up to that point was very good, predominantly white candles. Price action was fine. No major round numbers in the offing. I don't think that candle is in and of itself the problem. This candle here is starting to create problems because we tried to rally. Okay, so supply is not great. We don't like supply. We lose money when we see supply in a situation like this when we're long. But sometimes it can be helpful in telling us whether we need to be in the position at all. So supply is fine if it is very quickly recouped or responded to by excess demand, and we want to see that demand stick. And it didn't stick on this candle. We came up into the candle. This candle was at one stage a white candle, and then we got hit back down by the close. So confirming that supply is in the market, is that enough? I still don't think so, but we can see things are changing. I think we're very close. And it could be a jump from somewhere around here might have been 1/3, but it's now kind of past that into a 2/3 manage your risk situation. And I'll tell you why. I think we've got a couple of little lower shadows there, which I think are telling us that we're trying to hold. We're also trying to hold that short-term uptrend ribbon. There is a little trough actually just extending at the same price over from here. And I would say, look, we're very close. Closing beneath that, it's up to you whether it would be minus 1/3 or in brackets minus 2/3. And I think just in the environment we're in, I'm leaning towards the latter. So close less than. That level would, for me, require some risk management. Okay, reducing our risk. And if you wanted to hold 1/3 to see maybe markets improve, and you'd be too frustrated if you had gotten out of everything by then because you like the story or whatever it is. That's not how I operate. Then that's up to you. I wish I had better news for you, Davis, but it's just looking like a little bit in the too hard basket there. It's certainly to hold the full risk position. Don't mind if you have some, but otherwise let's get our capital either to work somewhere else, probably not, or to safety, probably. Mick's got BVS for us tonight. A similar theme, isn't it? And probably at this candle here, just looking fantastic. Actually, not more than fine, but fantastic. Looking great. They're pulling back. Big pop up on the earnings, I'm guessing. Fairly benign, fairly shallow pullback, and then we're just waiting for the next move up, and that looks good. And then, unfortunately, while this is playing out in its own little world, the ASX 200 is starting to melt down a bit, and that's making it hard for anybody to want to have risk in the market. So we're seeing a bit of a washout. And the key, I think, is that candle low. I mean, it's just so clear that is where the demand is coming back in around that 250, and whether it's deliberate 250 buy order or coincidence, they just felt it's pulled back enough. That's the level, and unfortunately now that demand is filled. So the buy orders that were there working that area to buy the dip, they've got their shares, and now they're in a losing position. That might make them nervous. That might convert them to the supply side, which we already know is more active than we would like now. I mean, it was sort of fairly mild, fairly calm, fairly controlled, but now it's, you can see it started to be more active. So for me, at least minus a third on that basis. So that should be done. And really, as of today's close, I would suggest taking that action, or maybe even here, because I think that day it did close beneath that trough low. Doesn't matter. And then looking for confirmation. So next black candle, you probably go another third, and then you might be all out pretty soon. Or if you wanted to be more aggressive, just to get to the sidelines a bit quicker. When I say, I mean, you could just sell everything, right? You could just say, well, stuff this, so I'm awaiting for signals. I'm just going to get out everything. And I think that's baby and bathwater stuff. I think, you're still going to have some charts. We're going to see them tonight. Inevitably, you're going to ask me about charts which are fine. And we should let those charts be fine and only respond when we see signs like this that things aren't fine. So Mick saying that he's thinking a third or zero risk position. I'm pretty sure he meant MP1, but maybe he's already starting to get out of those. We looked at this on Friday, not that candle. So because we would have had 1, 2, 3, 4, 5, so maybe that candle. In fact, that candle, we would have had that candle to look at, I think. If that's today, Monday, Friday, Thursday, Wednesday, Tuesday, Monday. No, yeah, we had that candle to look at. So that FRP is tagged to here, okay? And I can't see the future, unfortunately, but I can say that as at those two candles, we've got everything we really want from a turnaround setup. We've got a base pattern. Look at this. I mean, it's textbook stuff. We've got a base pattern. We've got some volume and volatility events through the base pattern. We're back to high peaks and high troughs. We've got a big pop on earnings. So that's a big white candle, or gap, whatever you want to interpret it as. And then lower shadows, kicking back. Rising trend, short-term trend transitioning. Long-term trend, it has acted as dynamic demand. So tick, 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 tick. Every day of the week, I'm adding risk at that stage, and then the next day, obviously not. You go, well, not that you're getting out, but not adding risk. And then here we are. Okay, where are we? Unfortunately, beneath the two downward pointing shadows there, and I'll try to select this one. I don't want it to go away, so I can draw this in here. And I think today is, as you say, Mick, the day where you take a little bit of medicine and say, well, you know what, that didn't work out, and going to head to the safety of the sidelines for now. I'll keep an eye on MP1. There was a reason why it was doing the right things. Probably market conditions got the better of it, and I suspect that when market conditions improve, if they improve, then those same people will probably go back to Megaport first before they start looking at some of the other stuff, which is far weaker. So that's where I am. I think, Mick, I agree with you. I think he's already taken some off the table, and he's thinking about taking another third or going zero risk position. I don't mind going to zero risk on this one. You're probably getting my tone tonight, and just say la vie, see what happens, and we can always add risk back, and we can always add them back to the best charts. We don't have to hang around in what are becoming mediocre charts just for the sake of keeping some skin in the game. In this market, what's the point? Going to your online requests now. Thank you, Davis, and thank you, Mick, listening on the recording. Adonis has got CYL, which, there you go. I mean, I said about a minute ago, we're going to see charts today that still look fine. And what we don't want to do is throw these out in a panic that the broader market isn't doing what we want it to. I'm just going to get rid of some of these. We obviously looked at it in the past. We were full risk position back here. We said to exit a third there and probably never followed it up, but I think you would have been getting out a bit more than a third back then. I can't remember when I started running this again. I want to say around here, probably here. I mean, check the website. Probably here. This is nothing. This is benign. I reckon maybe here, back in, and then definitely today. I know it's a feature chart for tomorrow because you can't fault it. It's the best chart you're going to see probably anywhere in the world. Do I need to explain why? Double greens, price action, predominance of white candles. So let's just copy. There must be an FRP 1/3 here somewhere. We'll grab that one, copy it, and send it over here. There's nothing else to do on that one. Thank you, Adonis. Adonis saying, I don't see why there isn't a trade here with good upside. Neither do I. And eBay in the US will do that in a second. Perry's got CYL. There you go, Perry. Great minds thinking alike there. Carl, Adonis, and Perry all catching that one. And then Perry's also got WAF, which is also my feature list for tomorrow, as it was, I think, for the last 3 days. It's been in that list. And it's still looking good. Look, it's starting to slow down a little bit there, but I still can't fault it in terms of it being an absolute picture of excess demand. I mean, you tell me what part of that chart tells you it's not a picture of excess demand. So with that in mind, why wouldn't you be FRP and plus 1/3? I am in discussions. The thought just popped into my mind because Perry's here, Adonis is here, and Hoosel's here, and Joel's here, and Brett's here, and Jenny's here, and Rupam's here, and Ross is here, and all my usual suspects are hanging around on it late on a Monday your time. But I've been talking to the Market Index Livewire people about doing a lunchtime session like this for everyone, for everybody in Market Index, a bit like I was doing with Think Markets. And I've got the green light on that. I just need to, just put a one-pager together on what it's going to look like. But it will also mean that we'll be able to hang out at lunchtime as well. And you'll all obviously all be invited, of course. And so will the masses, the unwashed masses that have never been subjected to this before. Could you imagine? Imagine how you felt coming in to live market analysis for the first time, and think about the journey you've been on. So that's exciting too, that we're going to have a bunch of fresh people coming in as well. So that, in theory, could happen as soon as Wednesday. We're going to do them on Wednesdays around lunchtime. So that thought just popped into my mind. Let's keep moving. Hoosel's got PME. I haven't looked at PME for a little while, Hoosel. What did we say last time we looked at it? I reckon I was calling exits. There you go, minus 1/3. And it's pretty much played out the way I thought it would, not because I'm Nostradamus, but simply because the market's been rubbish. And a stock's as good as PME, even stocks as good as PME, I should say, can't withstand the market being as rubbish as it is. And unfortunately, it's a case of how the mighty are falling. And I think we're pretty close. I think you've probably got some out, Hoosel, if not here. This is kind of the candle, isn't it? This is the one here. That's your confirmation. I find it hard to have anything left in this one after that candle, but at most, if you did, that's where I'd be. I'd be a 1/3 risk position at most here, but just about to more than one foot out the door. What's more than 1 foot out the door? I don't know. Who's all actually saying here took a third off around about 295, which is even better, I think, up there. Would we take another? I think you really should have. Taken a third off. I can't say that because I can't tell you what to do. I think I would have already taken a third off, and I think I'd be very much looking at like being close to zero risk position on that one. And look, I'd love nothing more than PME to throw in a big white candle here, because we know it's got the pedigree. We want it to do that. We want to get back onto it, even if it means we're getting back on a little bit higher. We don't wish it ill after we get out. We don't pat ourselves on the back. Oh, geez, I'm glad I got out. That's crashed. Hey, keep going up. That's fine. We want stuff with nice trends. We can often think that way, can't we, about stocks and willing them a particular way. It's a completely pointless exercise. Let's just want them all to trend up or down. Joel's got Telix, which is going to be a pretty similar category, I think, than PME. Again, such a great trend for such a long period of time, but starting to struggle, doing better than PME, and doing better than most, let's say, to Telix's credit. We did look at it last week, as you can see. There's plenty of scratchings on screen. We talked about confirmation. We talked about, the very similar theme to tonight. The move is great, of course, but what happens after the move? Do we get a quick response? Scenario 1, everything's fine, or do we get this lower peaks being formed, more sideways price action? Scenario 2, and we've probably had, that's Monday, Friday, Thursday, Wednesday, Tuesday. So we're looking at that candle last time, and therefore we can see that the scenario we've got is kind of like scenario 2, but actually worse. It just didn't rally at all. It's sort of come down and just peaking and troughing here beneath the short-term trend ribbon, which for a very long period of time was doing its job at acting as dynamic demand, but now appears to be acting as dynamic supply. It's interesting to look here, though, isn't it, Joel? Because we had a period of time where you probably felt much the same about how the price action is now. And, if you panicked too much back there, you probably would have been a bit disappointed. Not so disappointed that you couldn't have got back in, though. So it was a prolonged period of time. Like that's, you can often think, oh, well, that's no big deal. But, imagine it's about 6 weeks. It's about 6 weeks, nearly 8 weeks of not doing a whole lot. And that's a long time for you to be watching it and being frustrated before it's got going again. And, if you got out of it, and then after 8 weeks saw those 2 big white candles and jump back in, would that have been so bad? I reckon that, paying that bit more would have been so much better than stuffing around for 8 weeks. And if that's the situation we're in right now, where this is a great stock and it'll be a great stock again, but it's going to stuff around for 8 weeks, can you bear looking at it every day for 8 weeks? It's 40 trading sessions, 40 times, going, it's rubbish. So, look, I'm of the inclination. I think we said if it closed beneath here, minus a third, look, it hasn't done it, to be fair, to its credit. I think given the lack of positive price action, we take some action, okay? So we just go a precautionary third, and we stick with this so that when we do close beneath that trough low, forget this one, right? It's still this one. A black candle close beneath there, that's your second, that becomes your second third now. And then I would say, and this is just me, but I would say beneath there now, that becomes your final third. Okay, hypothetically speaking, of course. Let's go to your second one, which is RME. Let's try that again, RMD. Well, I wish it was RMS because that looks fantastic. So another gold stock. And as I said with gold, don't put all your eggs in one basket on gold. Be sensible about these things, but Ramelius still looks good for whatever it's worth. We're going to Resmed, which doesn't look as good because it doesn't have any gold, unfortunately. And yeah, I think we've had some problems here. Not got some problems. We've had some problems because we moved. It's just really annoying price action here. No peaks, no troughs. So that. And I have spent hours, ladies and gentlemen, talking to Grok about coming up with a tool that can draw those lines on for you. Okay, I'm working on it. Imagine that. Imagine it automatically picking up all those peaks and troughs, and you just click a button, and it just puts them all up there for you. You can immediately see the price action. I could never hope to program it in a million years myself, but I'm hoping Grok can help me do it. It hasn't done it yet, and it's just giving me gobbledygook at this point in time, but you never know. So stay tuned on that one. AI is amazing, and I intend to get the absolute most out of it. So what we have here, as Adonis was giving us thumbs down before, is price action, which has really gone past minus a third, and areas of demand. Look, I really I know there wasn't a trough there, but I really wouldn't feel comfortable holding a full risk position under there, and then the next one would be under there, and then absolutely probably completely out by there. So yeah, I'm ZRP on this one. I can't see a reason just at this stage to have any risk on it. If that doesn't sit well with you, want to give it a little bit more of a chance, you can, because of the way it's setting up. Sometimes I might say, look, it's just irredeemable. There's no redeeming features. So that's not the case here, because this last little move out of the long-term uptrend ribbon is a solid move. It's a credible move. The candles could be better. But what it does is it allows us to set our, I think, our final exit here. So close beneath there, and let me look, I'm ZRP now, but let's just reiterate by saying close beneath that would be ZRP. I just can't see a reason to hang in past that. All right, let's go to, Perry's got some US ones. We'll do that in a second. Educate the masses, says Oozle. I don't, look, they're not the masses, they're just people, and I just like talking about charts. So if people want to listen, I'm prepared to talk. You, Sudesh, I was really hoping I wasn't going to get this one tonight. So what do we do with Droneshield? Little live market analysis history. Mate, we caught this move. We pretty much nailed that move. I'm pretty sure I sent you a tweet on that day and said zero risk position on that day. I said species ending event. If you got in on the last candle, you were disappointed. If you got in anywhere but probably the last 3 setups I gave you, you're probably pretty happy. Since then, I think I started to call it a short around here, if I'm not mistaken. And I think you're out of those shorts now because of that, and that. They're just too strong. And not only that, the pullback, relatively shallow, stopping at what has become the short-term uptrend ribbon, now it's showing dynamic demand, and then piercing the long-term trend ribbon quite easily. That's transition to neutral. So this is actually a turnaround setup now. I didn't run it today because I didn't know what to make of it, and I don't have all the answers all the time. And that's why I was hoping Sudesh wouldn't ask me about it, so I wouldn't have to talk about it and tell you that I actually don't know what to do with this one. My gut is saying it's fine. That candle is too strong, and as a turnaround setup, we should just add some risk to it. My head is saying, "Are you crazy? It's Droneshield. Like this is a recipe for just pain and losing money." And look, there's some supply in there, potentially through that trough there also. I just feel that this is such a tough one now that it could just turn on like that. You'd be disappointed. But why am I letting those thoughts get in the way of the setup, which is, it looks like the demand side is back in control. Like, you tell me who's in control of that now. I don't think you can say the supply side's in control, but that's a turnaround setup. Like it's that line ball. So my rationale, the reason why I didn't go in tonight's setups was I felt I needed a dink. I felt that this isn't enough of a dink. This dink through here, okay, I don't feel that that's telling me that the long-term trend ribbon is acting as dynamic demand just yet. So I know it's a bit of a cop-out, but you'll see it. Any sort of dink like this, and then I will happily go. But let me just see how this responds to a supply-side attack. I think that's where I'm going. Let me see how this responds to a supply-side attack. I'm in two minds about it. I'm not confident about it. I don't trust the demand. Okay, now whatever that is, me not trusting my own system, is something very instinctive. It's coming from, it's intuitive, it's years of experience, right? Not to trust this one, even though there's probably a setup there. So the way I reconcile that is by saying, okay, you look good, granted. Let me see how you respond to a supply side attack. Do you crumble? Is it a big black candle? and down she goes? Or is it a small black candle or a long downward shadow, holds that ribbon, another little white candle? You know the setup I'm talking about. Okay, if you prove that to me, then I'll happily support it. Thanks, Sadesh. Let's go to... Michael had Droneshield as well, so I wasn't going to get away with that one today. And it's a function of me teaching you that setup and you applying it really well. You've all seen the right thing there. You haven't seen the wrong thing, you've seen the right thing. Let's go to HCL, which coincidentally is another turnaround setup. Is it as strong as Droneshield? I don't think so. I think Droneshield was clean candles. But this is still good. No, it's being supported by the short-term uptrend ribbon. We do have a long base pattern. We haven't really had any sort of supply events through here. I mean, it's a little bit hard to see because you've got some huge days that throw the scale out. It's a bit sketchy. The candles, as you can see, are overlapping. They're blocky. You've got, when you have these, I mean, this is really important. Actually, this is pretty important. So when you see these, so that day, what was its open, what was its high, what was its low, what was its close? They were all the same price. The volume it traded on that day was 300 shares on a 17-cent stock. Okay, so that's not a great deal, is it? I think I was going to say, yeah, a few people doing the thumbs down, and you know, what's 300 times 0.17 is $50. So $50 worth of stock traded on that day. And to put it into perspective, you know, you can't take your kids to McDonald's for $50 anymore, right? So yes, a little bit not sure about it. It obviously is not meeting my liquidity filter, as you can see over here, minimum turnover filter, and therefore it would be a pass for me personally, but it is meeting the criteria. And if you wanted to have a go, I wouldn't say no because it's meeting the criteria. So I'll leave that up to you. I'm not going to put 1/3 on it, but it certainly is one I think you can keep an eye on. I don't know how to put that any better, Michael. I think you know where I'm coming from on that one. I just think the risks are elevated because it's so illiquid. That's all. But yes, to answer your question, it is a turnaround play. Peter, we'll look at your US dollar Japanese yen when we're heading back up the other way. In the meantime, we'll do SPR, which is still, I think, a very good chart. I actually put this in tonight. I think this is quite interesting. And this is the DINK. Okay, isn't this quite good, actually, that we've got this? So that's what I want to see on Droneshield. And, you know, I saw it on this day, and that's a nice big white candle. And it's actually coming out of the uptrend ribbon really well. You know, I know it's a bit sideways, but you could have gone on that day in theory, right? But this is what I want to see. I want to see how it responds. If you've got any distrust of a setup, just be a little bit patient and see how it responds to a supply side attack. Does the demand side crumble? Is the supply side therefore emboldened or becoming more desperate because they can see there's no demand, and that increases their desperation to get out? Or does the demand side just soak that up and say, yeah, okay, that's fine. You know, yeah, we're taking a bit of a breather, but we're still going to stay here and we're still going to soak it up. And then that's it. That's the candle. So if I was to see something like this on Droneshield, then I'd be all over it. But I am seeing something like this on Spartan, and that's why I put it in tonight. I think it's done enough to earn itself certainly a full risk position if you've got it, but also plus 1/3 if you don't. Is that going to be the best setup we're going to see tonight? Well, let's keep looking. Obviously, we saw one earlier on, CYL, which I think is superior to that one. But this is good. It's just different, isn't it? And it's good to have a mix of setups. SMI definitely came up today. I did run it in the broader shortlist for you, Peter. I didn't shortlist it as a feature, is the other way to put it, because I looked at the volume and it just wasn't much conviction today or interest. Low volume isn't bad with good candles. It just means there's no supply. I mean, there's demand in the system. It's just not meeting any supply, and that's still good. But if we could just get that push, it's supply removal, it's just dominance, it's just interest. It's just, we don't want high volume all the time, but I'd prefer to see it on a push through a point of supply to tell me I've actually got all that supply to the system. But still very good, no doubt about it. And FRP plus 1/3 for me. That's a very easy one for me to analyse, unlike Droneshield, for example. Okay, let's keep moving. Getting a few gold stocks here. MEK is another one that was also on the list tonight. Didn't make feature because, again, look at the volume. It's just a little bit sleepy at the moment, but sleepy's still okay. It's a matter of time, I feel, on these until you get that big volume day and that big push through. FRP plus 1/3. This has been on the list for quite a while. Let's keep moving now. David's got a PME, which we've actually talked about already. He's saying it announced its inclusion in the S&P ASX 50 index. Any thoughts on likely impact? I know it's not technical analysis. Look, inclusion of the ASX 50 generally doesn't make a big difference, all right? Certainly there are big like tectonic shifts. You go outside the 200 into the 200, that generally will be a big difference because index funds track the 200, right? They don't track the 50, they track the 200. So definitely funds will be obliged to have a weighting. And you might think, oh, that's got to be good. But there can be some bad things about it as well, because often as funds take up stock, and they're passive funds, of course, that stock just sits there, does nothing. It does, therefore, does anybody want to finish my sentence here? Where am I going with this? So passive funds forced to hold X amount of stocks that are included in the 200, what does it open up those stocks to? You need to think about that. So there you go, Perry's got it. So sometimes you can see stocks which are performing poorly, they absolutely crumble, or stocks that may have been doing well but then starting to come off. They're in that phase where the markets are not as enamored with them. And obviously they get in because of that initial rise, their market cap goes up, they get included, and now the short sellers attack them. So Perry's got it. So my point is that won't be a problem for PME because the shorters have had access to PME for some period of time. That move into the 50, I don't think is going to make a big difference. Move into the 300, yes. Move into the 200, yes. And I think from there it's much of a muchness. That's just my opinion. Overseeing them over many years, that go in and out of them, and sometimes getting taken out of the sector, the ASX 100 can be a godsend as well. And we've seen this many times where stock has been falling because the shorters have been shorting the hell out of it, and then it gets taken out of the index because its market cap is too small. They have to take it out, and then the shorters have to cover back because the funds don't need to hold that stock anymore. So the funds go, okay, the funds don't make a decision. The funds are passive. They just go, okay, well, that's not in the index anymore. Let's just sell it. So they need their stock back. They can't sell the stock because it's been lended out to all the short sellers. So they say, hey, short sellers, give us all our stock back. And then the short sellers have to go and buy that stock back on the market. And then this crappy stock gets a huge pop short selling rally because it's been taken out of the ASX 200. It is a crazy world we live in. Michael's got OMA, which I'm not sure what OMA is. I haven't heard of it. Oh, there you go. I actually did come up today. And I haven't seen it until today. I suspect it might not have been meeting my turnover filter up to this point. It hasn't been ringing any bells. There you go, turnover filter 0 there. So it was looking good there. So, I mean, that would have been the perfect day for me to put it in, but not then. That might have stuck in that day. Oh, okay. Probably saw it on that day, didn't put in just a shadow and a shadow. And then it hasn't really required it until today. Today, I think, definitely requires a look. And the only reason why I didn't include it today, Michael, I'm pretty sure Michael asked me about that one. Michael, is the upper shadow. Just enough of an upper shadow to just keep me back and say, look, give me a high close. So this one's very straightforward. Next high close would be plus 1/3. But in brackets, if you've got it, I guess you are FRP if you have it. Let's go to that second one there, which is CAT, which I actually did put in tonight. And I just feel that, there you go. Minus a third, minus another. So we're kind of stepping out of this. Fortunately, it didn't close beneath that one. So a third, and so not exiting the second third. I think on a candle like this, you need to think seriously about adding the third back. And then this is a little pullback here. This is a little dink in itself, isn't it? Sort of rally, pull back, and then rally today. And the volume's actually pretty good above average volume today, last few days. So I think there's a bit of a changing of the guard. Yes, there has been some selling, but I think that demand is coming in, soaking that up now, and the price action in that volume is telling us soaking, and now gaining control. Soaked up so much supply that there's actually now a vacuum of supply, and I still like the stock because I was waiting for that pullback, and now that stock has dissipated, that supply has dissipated, so I'm actually having to pay higher prices now. Plenty of demand taking up plenty of supply, but that price change now is showing you that supply is probably out of the system, and probably we'll see now volume dissipate because that demand is working into a supply vacuum. So if you see below average volume tomorrow and the next day, and we're still sort of chipping higher, then that would actually be a good sign. So that's I put it in today. I feel FRP if you've got it, plus 1/3. If you don't, I definitely ran it in the shortlist. I don't think I ran it as a feature though, because I'm still a little bit concerned about that point of supply up there. But I think we're going pretty well there. Let's go to JLG, which is that's what we can talk about shorting. Evan has talked about that before. It's one certainly that's come up many times. In fact, the last time we looked at it, we said short it. And I think you can do that today. Is this the best one? I didn't run it as a feature today. Certainly I put it in the broader shortlist. And just that shadow and that shadow tells me there's still some stubborn demand there at 250. So I think we might get a couple of candles before it becomes the short again. I'll just write that on there. So next low close this time, minus 1/3. But there are probably some better ones out there. And in terms of better ones out there, these are the ones that I did shortlist. So Alpha, HPR, I don't know if they're all short sellable. You'll have to check with your actual broker. Boss Energy's just gone, isn't it? I mean, that's cracked to what, two-year lows. Yep, about 2-year lows, almost exactly there. So that was shortlisted. CSL, as I said, I'm pretty sure I started calling it at that arrow right there, short. On a blue chip stock that most people would tell you should be a stalwart of your portfolio. Another signal for me here on that last candle. CTT is just one that is irredeemable. CU6 in the same boat. Hum, some strong candles there. IGO short it to 0. IPX I think has turned. This is almost exactly one of those market darlings, isn't it? That it probably I should check, but probably got itself in the 200 and now is open to short selling attacks. And may well head the other way. That is an early stage. That is a turnaround setup heading the other way. But here you can see how turnaround setups work. Minus. And here's the signal here, isn't it, to start shorting it. Magellan Financial, Peninsula is a basket case. Propel Funerals, turnaround setup there. Reese, continuation, basket case. RPL, turnaround setup. Silex, another uranium stocks. VEAs just keeps going down. WO1, a little bit contentious, maybe a bit sideways, but I think starting to move now to the short side. And WiseTech, I think, is in big trouble with that big gap down and just lack of a bounce. And of course, we know how mums and dads think. They think, oh, WiseTech's cheap, I better buy it. But the fact that it had no bounce tells you that there is a wall of motivated supply in the market, and it won't bounce. So there's some shorts there for us to look at. Maybe I've cut a few people off in what they were going to request, but that's okay because we're running short on time anyway. I should make the announcement that Horachi's got our last request for the evening. Let's go to Michael's back in again with Droneshield, hoping no one would ask. You're not crazy. I think very valid in asking that question. Peter saying wait for a dink, and I reckon Peter probably said that before I said it because I've taught you to look for one. Jackie saying Droneshield again is near $1. So just remind me what's going on there. Yeah, look, it is near $1 as well, but I don't think $1 is going to be a big deal for it this time because it has dealt with $1 a few times in the past. But it could well be a reason for a pause, Jackie. It could be a reason for the dink. It could sort of instigate the dink in that if it was around 50 cents, if this rally started from around 50, it didn't, it was about 60, people are doubling their money, and that will be enough for them just to put some supply in the market, give us that supply side test. So I think that is a valid point as well. And Michael saying also dollar could come into play there on Droneshield. Brett's got a request here, LNS, which has got itself off the canvas. I'm going to say a bit of liquid because I can see some of those dashed candles, if we can call them that. But a nice volume showing here. Look, I don't mind it. Let me have a look at the weekly chart, see what else is going. It hasn't been around that long. The only reason why I'm still contemplating this is that we actually have some decent volume here. So it's on the radar. It's probably got itself into a few chat rooms, and I don't mind. Look, I could add some risk to this if I had nothing else better to do. How does that sound? But I can't stop you from doing it, or I won't stop you from doing it, because it makes sense. It makes sense. Everything else kind of checks out to me. So plus 1/3, but just be aware it's illiquid. You could get a big black candle the next day on not much volume, but you go into these things eyes wide open, okay? And we're not betting the house on them. We know we're having a punt on this one. Whereas something like Medicus, 12 months ago, we're looking to build a position on, right? This, we're having a punt. Let's go to BC8, which I still think looks excellent. I put that in the shortlist today. I can't fault it. It just keeps doing the job. You can obviously see there is one potential issue that is coming up. Is the dollar going to be a problem? Look, it could be, and it might seem completely innocuous now, and then you get a bleeding great big upward pointing shadow there. But that shouldn't worry you too much, because we're not there yet. It's still got a little bit of room. It did spend some time at 50. There are going to be people who are going to be locking in double their profits there, okay? Little bit of room, probably enough that if it was to hit that and start to go awry really quick, you'd probably worst case break even. So look, I ran it today. I did think about it, and really everything else, the pedigree here means I can't fault it. It's a plus 1/3. We've seen a bunch of gold stocks in these situations, ladies and gentlemen. So just, a little bit eyes wide open and don't overdo it on that gold theme. GG8's another one. I can almost go ditto on that. I didn't run it today because of that upward shadow. I don't think that's enough in and of itself to warrant taking any risk off the table. That's just me. I mean, people are probably more jittery now than they are, and sometimes in jittery markets, it only takes a little shadow like that to bring in the supply the next day. But I'm still hanging on that one. Obviously, I'm not going to add risk given the upward pointing shadow, but I still think it deserves FRP for now. Shortest from Peter, shortest from Perry. You are absolutely correct. SPR will be included in the ASX 200 on the 24th. And, a bunch of them will be. And I'm pretty sure OBM and COL, and I'm pretty sure I saw today while I was doing the interesting movers section of tonight's wrap, a few of them had that notice there. So just be careful. Like, as we're heading into it, like funds are trying to get position, right? So funds are trying to position themselves. Once we're in it, that's when the shorters will have the ability to go and borrow that stock and short it. Okay, so we're probably okay until it actually happens. And after it happens, then we might have some issues. But that's down the track. Let's see what candles fall, and then we'll make our decision there. Thank you, Peter. That is a good point. Haraji's got our last two. Then we're going to head back up the list. RXL, which made the list tonight, and I think also did it make feature? It did make feature, yeah. Look, it just snuck in with above average volume. So a couple of them didn't get in, didn't make feature. They made the shortlist but not feature just because they were below average volume. This actually just printed a nice white candle, a little gap from the previous day there as well. So, some nice volatility, some nice volume, good outperformance as well. You can see there in the RSC. And otherwise, apart from this point of supply here, looks pretty clean on the way back up, pretty fluid on the way down, so fluid on the way back up. So I don't mind it. Yeah, a little bit sketchier than some of the others on the price action, but not enough to push me off going FRP plus 1/3 on this one. So let's write that on screen. FRP plus 1/3, and your last one there is MHK, and we'll check that out. Oh, good. Look, I haven't seen this one. I'm guessing not meeting my liquidity filter, and you can see over there it's not. But if it was, this would be on my list, and you can see some decent volume as well, decent volatility, nice base pattern through here. I can't fault this, and I think next stop here is probably 50 cents, and that doesn't dissuade me from doing it. So I'm kind of regretful now that I couldn't put this in my chart watch scans, but yeah, I like this one, so I'm going to go FRP from here and copy and paste that over there. So a couple of really interesting charts for you there, Harashu. All right, let's flick over to the TradingView screen, and we're going to head back up the list now. And the first one I'm pretty sure I saw was that US dollar Japanese yen for a potential short. That's Peter. And let's check that out. going to go to my futures and forex list, and you all have these lists, right? I've given you these lists as well, I'm pretty sure. So you have the ability to quite easily navigate through them. US dollar, Japanese yen. Yeah, I can't see why. If that was a stock chart, we'd short it, wouldn't we? So yes, absolutely yes, no doubt about it. From me, that is a textbook turnaround setup. And next point of demand's down at 140. So, yep, happy with that one. Let's go to the. I've done those. Let's go to. Perry's got CHKP. CHKP. Checkpoint Software Technologies. Oh, how good's that? Is the market crashing? Is it? I don't know. I can't tell. I look at that and you just think it's a bull market all round everywhere for always. And you can't fault that. And if you've got room under your cap, then you're compelled to be long this thing, aren't you? Because it is going up in the worst market. What does that tell you? Think about. It's not a coincidence. The people who are buying this stock like crazy, they know the market's rubbish, and yet they don't care. They want to own this thing. And the people who own this stock, they're getting killed everywhere else. They're probably getting margin calls everywhere else, and yet this is the one they're not selling. What do they think about it? So demand side loves it, supply side loves it, so I love it, and therefore I'm compelled, is the word, to go FRP plus 1/3 at least on this one. So yes, happy with that one. Let's move that a little bit around. Oh, this is where I get caught into TradingView. There we go, and we'll click save. Thank you for that one, Perry. And the next one is BJ, which is BJs Wholesale Club. Again, two incredible candles. Check out the weekly chart. Even better, can't fault it. And have to go. Yeah, look, I think I might prefer the other one simply because it's just closer to the green ribbon, but this is a very strong showing. I mean, it's a stronger showing. It's just, how you feel about going that much further away from the green ribbon, but it's not a deal. It's not far away. Don't get me wrong. It's just further away than the last one we saw. But otherwise, no qualms from me. That is, they are two ripper setups. Let's keep moving now, and we're going to go to Apple for a dinosaur. Actually, not far away. I think we've just got this one and one more. There we go. Spam the keyboard. Bit neutral here, I think. Adonis, aren't we? He's trying to hold that long-term uptrend and doing a very good job of it. And you can see that it's borne out in the relative strength comparative. Like, it is beating the market right now, and it deserves respect for that reason. A couple of decent downward pointing shadows into the long-term uptrend ribbon tells us there's demand down there. There's some buy the dip price action. Having said that, it is more equilibrium than anything else, because you can see the supply side is clearly, or just as clearly, working into the system, and that supply side pressure against that demand side pressure is pushing us sideways. So what would I do with this if I had it? Look, I could see a reason to hold some, like a third, and be happily in cash on the other 2/3 and waiting. A nice white candle pushing into sort of 248, happily adding some risk back, because that's really all we're doing. It's like our worst case scenario is to miss out on $5 or $6 on a $240 stock. And I think that's fine. And, the upside is that if it tanks, well, who cares about that $5 or $6 that if we had to pay it compared to if we hold on all the way down. We don't need to think in terms of, it's that ex post regret. Oh, I got out, I can never get back in. That's silly. You cannot have any emotional attachments to these things. They are just numbers. They're just pixels. They're not even stocks to us. They're just pixels. They're less than stocks. They're not even, we could say, they're inanimate objects, or I've got a history with this. These are just pixels. Some of the pixels are black. Some of the pixels are white. Some of the pixels are orange or pink or green. And that is it, ladies and gentlemen. Do not overcomplicate it any more than that. These pixels are telling me 1/3 risk at most. If it starts to move back through 250, I can add some of my hard-earned cash to these pixels, and if not, say la vie. Let's go to, well, that's it, eBay. And that's it, eBay. And how we go? Good time, I think, as well for tonight's session. Oh, eBay looks good. And that's the kind of candle that we want to see on Apple to tell us to get back in, isn't it, Jonas? And until then, we don't have to do anything on Apple. But I think we can do something here on eBay because I'm really impressed by eBay, as I was with Perry's 2 US stocks, given what's going on in the broader market. And that doesn't scare me at all either. I think, it's had a couple of goes into this supply zone. And that emphatic close, that's an end of week close as well, I think is very strong and telling me that this is probably not an issue anymore. That's probably not an issue anymore. So look, I'm happy to go with your judgment there, Adonis. And look, I think you could wait till it closed above that. I don't think you need to. Again, it still comes down to, do you need to add risk right now? All right? Do you need to add risk right now? But FRP, if you do, FRP plus 1/3. Escape. Click save, and I reckon we're done for tonight. And we are. There's no other requests there. So let us head over to the not to there, but that is a good way to leave it when we do finally go to the disclaimer. There it is. You know the drill. It's all general. Consider it carefully, or ask somebody who's a lot smarter than me whether it's appropriate for you. You could lose. Keep that in mind, and you have to take responsibility for the stuff that you do. Hang in there, everybody. We are in a bit of a sideways 50-50 market. That's okay. That's going to happen. It has to happen. It's inevitable. It's just as inevitable that we're going to move out of that market, either into a wonderful uptrend or a wonderful downtrend. So that's it. That's the message. Hang in there until it does. All the best for your trading until we catch up again. Bye-bye for now.